The breaker block is one of the most repeated ideas in smart money concepts. Broken supply becomes support. This read adds a discipline most breaker content skips. A broken zone is a hypothesis, not a breaker. On this chart, a supply zone is genuinely closed through. The flip is confirmed rather than assumed, and two pullbacks land exactly on the flipped level. Broken is a fact. Breaker is a verdict. The chart opens with a choppy, two-sided base, sharp swings in both directions as the market works out its low. From this volatility, a recovery emerges, and structure begins stepping upward out of the noise. The base matters for one reason. The recovery it launches is the move that will eventually create and then break the supply zone this retracts. One continuous story about a single level changing jobs. The recovery stalls at a swing high and turns down, and the supply order block is marked at the failure point, the footprint of the sellers who capped the advance. The band extends forward as active supply, the ceiling for the structure beneath. Right now, it is indistinguishable from every other supply zone in this library. Its story differs not in how it formed, but how it ended. Not defended, not spent, but converted. A strong advance drives price up and through the supply band. A genuine close through, the buying absorbing what the zone had left and closing beyond it. Here the discipline begins. The reclaims red showed closes through a zone reverse more often than most expect, and a zone flipped at the first close through is a verdict issued before the market has ruled. The close through does not create a breaker. It opens the hypothesis of one. The market answers the hypothesis. Price behavior above the broken zone confirms the flip, and the band state changes on the chart. The supply marking ends, the bull breaker begins. One level, two lives, the conversion point visible where the band changes. The zone was not awarded its new role for being broken. Being broken is common and mostly meaningless. It earned the role when the market demonstrated the polarity had genuinely inverted. The confirmed breaker extends forward beneath the developing structure, the exact band that capped the market now marked as the level most likely to catch it. Trapped shorts from the failed supply and the buyers who broke it both have business at this price. The question every flipped level must eventually answer is the one every zone in this library faces. What happens on the return? The advance pauses and price pulls back, and the decline lands precisely on the breaker band. The dip's low printing into the flipped level. The old ceiling receives its first examination as a floor. This is where the confirmation discipline gets paid or punished. A false flip slices through here, revealing the support as a drawing. A genuine one finds the resting interest the flip implied on both sides of the level. The breaker holds. Price turns at the band and lifts away, higher structure resuming directly off the level that used to cap it. The first examination is passed, and the flip moves from confirmed to demonstrated. The level has now done its new job. Note the shape of the hold, a clean catch and turn rather than a battle. The signature of two-sided business agreeing on direction. The quiet holds are often the strongest. The market offers a second examination, another pullback, another landing on the breaker band, another hold. Two independent returns to the flipped level, both caught, both turned. A twice-held breaker is the polarity flip proven in the only court that counts, repeated behavior at the level. And each hold is also a draw on the level's resting interest. Breakers deplete exactly as zones do. From the twice-defended breaker, the trend builds higher, lows and higher, highs stacking above the band. The structure's foundation resting on the level that spent its first life as the ceiling. A completed polarity flip contributes not one bounce, but a platform. The level's history on both sides gives it a density of interest that fresh levels lack. The advance accelerates to new highs, extending well beyond everything the old supply once capped. The band that began as the ceiling ends far below a trend that stood on it twice on the way up. Every stage of this outcome was downstream of one decision, treating the close through as a question rather than an answer. The state change predicted none of it. It was the honest bookkeeping that let the rest be read as it happened. Three things to carry from this chart. First, a broken zone is a hypothesis, and the breaker must be earned. Closing through supply is common. Supply genuinely inverting into support is much rarer, and instant breakers fill a chart with flips that never flipped. Second, a real flip's logic is two-sided trapped interest, buyers defending their break and trapped sellers covering into the same level, which is why genuine retests so often resolve as clean catch-and-turns. And third, a confirmed breaker is still a level, not a promise. Breakers deplete with each defense, and the state change records only that a flip was confirmed. If reading charts this way is useful to you, subscribe to SMC Chart Sense for a new chart read every week. That's the best way to keep these in your feed.